The Alpine House, Inc. is a large retailer of winter sports equipment. An income statement for the company's ski department for a recent quarter is presented below. Skis on sale on the average for $750 per pair. Variable selling expenses are $50 per pair of skis sold. The remaining selling expenses are fixed. The administrative expenses are 20% variable and 80% fixed. And the company purchases skis from an outside supplier at $450 per pair. And for the most recent quarter, we sold 200 skis. Prepare a contribution format income statement for the quarter and compute the contribution margin per ski. Let's begin by picking up our total sales revenue, which was given as $150,000, or we could calculate it by multiplying the $750 per unit selling price by our 200 skis. Our cost of goods sold will be our $450 per unit cost multiplied by our 200 skis for a total cost of goods sold of $90,000. Our selling expenses will be $10,000. This is our $50 cost per unit multiplied by our 200 skis. Our administrative expenses were given on our normal income statement, and we're told that they were $10,000 and that 20% of the administrative expenses are variable. This means the variable portion of our admin expenses is $2,000, which gives us then a contribution margin of $48,000. This is our total sales revenue of $150,000 minus our cost of goods sold of $90,000, minus our variable selling expenses of $10,000, minus our variable admin expenses of $2,000. Let's go ahead and look at our fixed expenses. Our fixed selling expense will be $20,000. This is our total selling expense of $30,000 minus the $10,000 portion that was variable. Our total fixed admin expense then will be $8,000. This is our total administrative expenses of $10,000 multiplied by the portion that is fixed, which was 80%. Our net operating income then is $20,000. This is our contribution margin of $48,000 minus our fixed cost of $20,000 for selling and $8,000 for admin. Our contribution margin per unit then can be calculated once we calculate our total cost, variable cost per unit. We were given our cost of goods sold of $450 per unit, our selling expenses of $50 per unit, and our admin expense will be $10 per unit. This is the $2,000 total expense divided by the 200 units. Our contribution margin per unit then is $240. This is the $750 in sales revenue per unit minus our variable cost per unit of $510.